Nokia shares spiked about 5% this morning after word hit the web that it struck a deal with Microsoft. But by noon, Nokia had dispelled the rumor, and the stock continues to trade around a fresh 13-year low. Bill Kreher, senior tech analyst over at Edward Jones, has a hold on the stock and says it's a race against time for the company. He joins us from St. Louis. Bill, good to have you here with Matt and myself. You say it's a race against time. Hasn't the clock stopped on Nokia?
Well, if you think about it, despite the significant bleeding in terms of market share, Nokia is still the world's largest handset vendor, which gives them some unique advantages, including manufacturing, the scale that they can achieve. But I do think that it is a race against time. I think the company needs to simply put, develop, market, and distribute compelling products, and they need to do it on the Windows platform. And if they can't do it in time, then they will continue to lose market share to companies like Apple and those that are using Google's Android platform.
You know, Bill, the rumor or the report that Microsoft may buy assets from Nokia is kind of weird, I think, if you look at it from the perspective of Microsoft. Obviously, they make software. They're not really that involved in hardware. What about from Nokia's side, though? I mean, does Nokia need to spin off assets? Is this what investors want the company to do?
Well, first of all, I would question the validity of the rumor, given that the company announced this partnership just 3 months ago. And if this does come to fruition, I think we have to look at CEO Elop and sort of what his mindset was at the time, because looking back, it would be clear that as he went under the hood, he realized that problems were much worse than previously anticipated, and now he's presenting the company with an exit strategy. But regardless of the price that's paid, if this does come to fruition, I think that the investment community, and certainly Edward Jones, would question the logic of an acquisition and what you could really get accomplished that can't be done through the partnership.
What do you think about from the point of view of Microsoft? I mean, if Elop went into Nokia and saw that things were much worse than he thought, he needs an exit strategy. What about Microsoft? I mean, do they need to be grasping at straws as well?
Well, that's a good question, Matt. And I think if you look at Microsoft and their history, they've always been platform agnostic. And so while this would, let's say that this happens and play the tape to the end, Nokia would become part of Microsoft. They would essentially be their hardware provider. This would give them the opportunity to create a more seamless user experience and potentially get their products to market faster than what they've done in the past. But the flip side of that is when you lose that agnostic status, you lose a lot of benefits, including the number of carriers that you have leverage with, the number of vendors that you participate with, as well as really what would be very difficult to overcome, which is the lack of a development community around your platform.
So, Bill, success is predicated, what, on how fast they can create some Windows phones that people are actually going to buy here. How quickly can they then?
Well, we think that they will have a phone out in the fourth quarter of 2011, but they probably won't have full critical mass until 2012. The problem is, in the near term, the Symbian platform is getting no love. The carriers are just not interested, and there's going to be a lull between now and then. This is going to be a pretty painful period for the company.
We should point out that, Bill, you have a hold on Nokia. You don't actually cover, you drop coverage of Microsoft, but neither one of those is a buy. In Wall Street speak, hold basically seems lately to mean sell, doesn't it?
Well, we had a sell at the $11 mark all the way down to $9, and we thought when the Microsoft announcement came out, hey, most of the bad news is out, and let's start from here. And essentially, you know, we were probably a little early on that call. But given where the stock's at today, we're very comfortable with the hold rating. But if I may, I'd like to suggest a couple of opportunities within the smartphone category. Both are on the Edward Jones stock focus list, and those are Apple and Qualcomm.
Got it. Hey, Bill, thanks very much. Bill Kreher there. Some straight talk. A hold meaning a hold.
A hold meaning a hold.
Which is not something that you encounter all that often.